Welcome to This Explainer. Today, we're rolling up our sleeves and doing a complete teardown of Ather Energy's newly announced 1,200 crore fundraise. If you're an investor, an equity researcher, or honestly just tracking the business of EVs, understanding the architecture of a capitalization event this massive is absolutely crucial. We're looking at a huge, pivotal moment for India's electric vehicle ecosystem, and my goal right now is to break down the hard data from the recent BSE filings. Let's look at what's really happening beneath the surface here. To keep things sharp, we've broken this analysis into 5 key areas. We'll start with the deal announcement itself, unpack the specific investors involved, look at the broader capital strategy at play, map out the competitive landscape, and wrap up with our strategic key takeaways.
All right, let's jump right into part 1, the deal announcement.
So here's the headline number. Ather Energy has officially filed for a massive 1,200 crore preferential issue. This is a highly significant capital injection for the electric two-wheeler maker. In the intensely capital-heavy world of EV manufacturing, securing a war chest of this exact magnitude is a major operational milestone. It really signals a pivot from just steady growth to aggressive market defense and expansion. Now, what makes this filing particularly compelling is exactly who is anchoring this tranche. We're looking at 3 primary participants: the Government of India, routing funds via the India-Japan Fund, existing major shareholder Hero MotoCorp, and Ather's own founders. It's a fascinating mix, right? Blending sovereign-level backing with deep corporate and internal conviction. Which brings us perfectly to part 2, unpacking those investors. Let's break down how this 1,200 crore rupees is actually partitioned. As you can see, Hero MotoCorp takes the lion's share here, committing 960 crore rupees through convertible warrants. Then, we see a highly strategic 200 crore rupee investment from the government-backed India-Japan Fund, deployed directly into equity shares, followed by a 40 crore rupee warrant commitment from the co-founders. This specific mix of equity and convertible instruments gives us a really clear window into the risk and return profiles each party is targeting in this transaction. I want to pause on that 200 crore equity block for a second because understanding the institutional weight behind it is critical. The India-Japan Fund, or IJF, is a substantial $600 million bilateral fund. It was set up jointly by the Government of India and the Japan Bank for International Cooperation, and it's actively managed by the National Investment and Infrastructure Fund. When a vehicle with this level of sovereign and bilateral pedigree comes in like this, it sends a massive signal of institutional confidence to the broader market. Looking at the other key players on the board, Hero MotoCorp isn't just a casual investor. As of June 30th, they were already Ather's largest shareholder with a near 30% stake. This 960 crore commitment, that is them heavily doubling down on that position. Simultaneously, co-founders Tarun Mehta and Swapnil Jain are personally putting skin in the game, committing 20 crore each through 158,730 convertible warrants apiece. Seeing internal leadership and primary corporate sponsors align like this strongly bolsters the narrative around the company's trajectory. Moving on to part 3, let's zoom out and look at the broader capital strategy. This 1,200 crore issue definitely does not exist in a vacuum. If we track the timeline, you'll notice a remarkably rapid sequence of corporate actions. On June 12th, Ather's board approved a total fundraise of up to 2,500 crore rupees. By mid-June into early July, they had engaged an army of 12 investment banks. That's a massive footprint and a clear indicator they were prepping for a major market event. Fast forward to July 14th, Hero MotoCorp's board formally approves their investment, paving the way for the July 15th official filing of this preferential issue. That June 12th master plan actually envisioned a 2-pronged approach. Up to 1,500 crore raised via a qualified institutional placement, or QIP, and the remaining 1,000 crore through a preferential or rights issue. So what we're analyzing today is really the aggressive, successful execution of that preferential portion, locking in 1,200 crore, while that QIP tranche is still waiting on the horizon. This perfectly sets up part 4, our competitive landscape analysis. Why raise all this capital right now? Well, the primary driver for growth capital is growth, and Ather has demonstrated a blistering 79.5% year-on-year growth in monthly registrations. Explosive scaling like that? It burns cash. You need continuous capital expenditure to sustain your supply chains, your manufacturing bandwidth, and your distribution logistics. And that 79.5% surge translates directly into hard market positioning. If we compare June data to the previous year, Ather's total registrations leaped from just over 16,300 to nearly 29,500 units. That jump allowed them to expand their total market share to 16.2%, firmly cementing their spot as the third largest player in the industry.
But here's the reality check. While Ather was an early entrant and pioneer, the current competitive environment is incredibly hostile. They are fighting a grueling day-by-day battle against legacy giants like TVS Motor and Bajaj Auto. We're talking about competitors equipped with vastly superior historical balance sheets and deeply entrenched nationwide distribution networks. So for Ather, this 1,200 core raise isn't just about growth. It's a necessary offensive and defensive maneuver to compete head-to-head with legacy auto.
In fact, we are witnessing a complete industry-wide arms race for capital right now. While Ather is prepping for its anticipated 1,500 core QIP, its direct rival Ola Electric just completed a 780 core QIP on June 4th, which notably exceeded its initial 500 core target. The institutional appetite for Indian EV manufacturers is red hot, and securing capital right now is absolutely imperative if you want to dictate future market dominance.
Let's synthesize all of this in Part 5, Strategic Key Takeaways. Let's boil this deal deconstruction down to 3 core takeaways. First, Ather has successfully and aggressively executed the preferential phase of its broader 2,500 crore fundraising mandate. Second, the composition of this 1,200 crore stack offers heavy market validation, driven by the sovereign-backed India-Japan Fund and the continued conviction of Hero MotoCorp and the founders. And third, this capital provides the exact ammunition Ather needs to defend and expand its 16.2% market share in an increasingly capital-intensive war against legacy automakers. Before we wrap up, I want to leave you with one final thought to consider. With this massive preferential issue secured and sovereign-level institutional backing mathematically validated on the cap table, how aggressively will the broader market price Ather's highly anticipated 1,500 crore QIP tranche when it finally launches? The foundation is clearly set, but the public market's ultimate verdict is still ahead of us. Thank you for joining me for this explainer. Keep analyzing the data, and we'll see you next time.